Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is June 26th, 2025. I am Nova.
I am Satoshi. Welcome to the deep dive. Today we're going to plunge into the crypto market, looking at the report from June 26th, 2025. Now, the market might seem a bit, range-bound on the surface. Trading sideways mostly. But trust me, underneath that, there are some really significant shifts happening. Okay, let's unpack this. So let's start with the numbers. Just get grounded. Even a quick snapshot tells a story. Bitcoin's around $107,800, up about 1.3%. Ethereum, new $2,468, so a small gain, 0.4%. Solana's at $145, down just a tiny bit. And, even some meme coins like PEPE were up, while others like Floki, WIF saw some declines. But here's where it gets really interesting. A big positive development, potentially a major shift for altcoins. I'm talking about Solana.
Ah, yes, the ETF filing.
Exactly. Just yesterday, June 25th, Invesco and Galaxy Digital, they filed with the SEC for the Invesco Galaxy Solana ETF.
QSOL, I think is the ticker.
Right, QSOL. And apparently other big firms are racing to get theirs in too. There's talk of potential SEC approval, maybe even by late July. For you listening, why is this specific filing, such a big deal? It's just another fund.
Oh, it's much more than that. What truly stands out here is it's a real validation. This trend, it really underscores this rising interest in altcoin products, from the heart of traditional finance. Asset managers are clearly keen to capture demand for these high-growth tokens, looking beyond just Bitcoin and Ethereum now.
Right.
And Solana, already the 6th largest crypto by market cap, it's a prime candidate for where that institutional money wants to go. It sort of legitimizes a whole new asset class within crypto.
Powerful signal, definitely. Mainstream acceptance, perhaps. But it's not all positive signs, is it? We should probably look at this contrasting move more cautious from the regulatory side.
You mean Barclays?
Yeah, the British bank Barclays. They announced they're blocking crypto buys on their Barclaycard credit cards starting June 27th, citing consumer protection.
Right.
How significant is that move? What's the bigger picture there?
Well, looking at the bigger picture, Barclays was pretty specific. They noted crypto isn't covered by protections like the financial ombudsman in the UK.
Okay, the dispute resolution service.
Exactly. That lack of a safety net is key for them. So this move, it'll likely dampen some retail buying, especially the kind fueled by credit card leverage in the UK. It closes off that quick credit-fueled on-ramp.
Okay, so institutional doors opening wider, but maybe some retail doors closing slightly. Interesting contrast. Yet, when we pivot back to what's really driving the market, it seems to be those huge institutional flows, right? US spot Bitcoin ETFs. They had a massive record inflow, $588.6 million on June 24th alone.
Wow, yeah.
That's 11 straight days of net inflows, adds up to over $3.3 billion. And it's the big names, BlackRock's iBet, Fidelity's FBTC leading the way. Even the spot Ethereum ETFs pulled in about $71 million that day.
Yeah.
Is it fair to say this is really the dominant driver now, or are we maybe overstating it?
That's a fair question. Look, global macro always matters, but the sheer volume moving through these ETFs, it strongly suggests they are the primary catalyst right now. We're seeing this direct, measurable institutional capital flow that, it just wasn't there before in this form. It's changing the market's liquidity.
Yeah.
So yes, I'd say this confirms that institutional and ETF demand is helping Bitcoin push back towards its all-time high, around 112K. And it's definitely supporting ETH prices too.
And it's not just ETFs. There's also this corporate accumulation piece.
Right, the treasuries.
Exactly. Like Pompliano's ProCap BTC LLC reportedly buying $386 million in Bitcoin just this week. And firms like MicroStrategy, they just keep buying.
Consistent buying.
What's the sort of longer-term effect of that kind of corporate buying?
Well, this ongoing corporate accumulation, it provides really crucial bid support. Basically, a strong underlying demand that helps catch prices when they dip. It's a key driver of capital flowing in, and it signals this deep, long-term conviction from major companies. Creates a different kind of stability, potentially.
Okay, let's shift gears slightly. There's a fascinating, maybe slightly worrying technical detail about network health. Bitcoin's network hash rate. That's the computing power securing the network.
Right.
It plunged about 15% between June 15th and June 25th. Data from blockchain.com. That's apparently the steepest drop in 3 years.
Yeah, that's significant.
What does that actually mean? A sudden drop in processing power.
Well, the price isn't immediately hit by it, but yeah, this hash rate plunge is something to watch. It's like a health indicator.
Yeah.
Analysts are pointing to a few things. Geopolitical strains, maybe, like Iran reportedly disconnecting big mining operations.
Uh-huh.
And environmental pressures, too. Think about the U.S. heat waves making power much more expensive for miners.
Right, increases costs.
Exactly. So it highlights these external, physical world pressures hitting Bitcoin's infrastructure. Short-term miner strain, basically. It's a reminder that, even digital assets rely on physical stuff. Investors should keep an eye on these fundamentals.
Good point. So, pulling this all together, what's the current market sentiment, the outlook?
Hmm.
It seems like easing geopolitical tensions, you mentioned the Middle East ceasefire talks, that's reduced some of that extreme tail risk.
Definitely helps calm nerves.
And you couple that with this flood of ETF money. Sentiment seems to have turned pretty bullish. Bitcoin's up, 9% in just 3 days? Back near that 106K to 108K level.
Yeah, strong recovery. Many analysts are now thinking it could challenge that prior peak if these inflows keep up.
But a critical note for you listening. Remember, volatility can still spike. Macro events, regulatory news like the Barclays move, things can change fast.
Absolutely.
So risk management is still, incredibly important. Because overall, it feels like a really dynamic landscape. We've got growing institutional legitimacy, the ETFs, bank custody,
Right.
but still these pockets of retail-driven swings, especially with things like meme coins.
That's a good summary. So we'd encourage you to keep monitoring those fund flows, the regulatory news, SEC, global stuff too, and definitely keep an eye on Bitcoin's network health. They're all important indicators.
So as these big players continue reshaping the crypto landscape, the final thought for you is, how might you adapt your own approach to navigate both these massive opportunities and, well, the volatility that's clearly not going away?